How to Start Investing the Right Way. A lecture for beginners in the world of investing. Investing often sounds complicated and risky. Many of us hesitate to even begin. However, I'm here to show you that it's simpler than you think if you follow a few fundamental steps. Let's explore together how you can successfully embark on your investment journey. Build a solid foundation. Before thinking about investments, make sure your financial foundation is stable. Do you have debt? Focus on paying it off first, especially high-interest debt like credit cards. Having an emergency fund is equally important. Save 3 to 6 months' worth of expenses to prepare for unexpected costs. Once these basics are covered, you're ready for the next step. Set clear goals. Ask yourself, why do you want to invest? Is it to save for a dream vacation in 1 to 3 years? Then short-term, low-risk options like a savings account might be suitable. Or are you planning for long-term goals like a retirement? In that case, stocks or ETFs are a better choice. Your goals will define your strategy. Understand the basics. Investing is not gambling. A few basic principles can help you minimize risks. Risk. Profile. Consider how much risk you're willing to take. Conservative investors might prefer bonds or ETFs, while those who are more adventurous could choose stocks. Diversification. Spread your money across different types of investments to offset potential losses. Compound interest. Reinvested gains grow exponentially over time, making compounding the key to building wealth. Choose the right investment strategy. What types of investments suit you? Here are some options. ETFs, perfect for beginners. ETFs replicate entire markets, such as the MSCI World, and are cost-effective. Stocks, if you're willing to research companies, individual stocks can be a great addition. Real estate, long-term stability, though it requires more capital. Robo-advisors, these automate your investments and are particularly helpful for beginners. Start small. Many people think you need thousands of euros to invest. That's not true. You can start with small amounts, like an ETF savings plan with as little as 25 euros per month. Regular, small contributions add up over time. This is called the cost average effect. Choose a platform or broker. Compare brokers to find the right one for you. Look for low fees, user-friendly platforms, and a wide range of investment options. Platforms like Trade Republic, Scalable Capital, or eToro are popular choices for beginners. Think long-term. Investing is a marathon, not a sprint. Don't let market fluctuations scare you. Stay calm and let compound interest do its work. As Warren Buffett, one of the most successful investors of all time, says, if you're not willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Continue learning. Knowledge is power, especially when it comes to investing. Read books like The Intelligent Investor by Benjamin Graham, or watch videos from channels like Finanzfluss. The market evolves constantly, and staying informed is always worthwhile. Regularly review your strategy. At least once a year, review your investments to see if they still align with your goals. Have your life circumstances changed? Do you need to adjust your strategy? Stay flexible, but don't be swayed by short-term trends. Avoid common mistakes. Lastly, don't let emotions drive your decisions. Avoid panic selling during market dips, and never invest in assets you don't understand. Patience and discipline pay off in the long run. If this guide helped you, give it a thumbs up and subscribe to stay updated on investing tips and strategies. Share your thoughts in the comments. What's your first step toward investing? We'd love to hear your story.